Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
All right, about 2 minutes away from the end of the trading day, Romaine Bostick, Caroline Hyde, and Taylor Riggs counting you down to the closing bell and here to take us beyond the bell. Our global simulcast now with Carol Massar joining us, bringing together our Bloomberg Television and radio audiences worldwide. Carol, we had that 1-2 punch coming in this morning. The J&J news, the CPI data, and the market said, it's okay.
Who cares? Who cares? It's unbelievable. We're going to finish just off our best levels of the day. I have to say, when I heard the J&J news, I thought, okay, this is not what we need. This is one of those wall of worry climbs that's going to create some nervousness in the market. Same thing for the inflation numbers. We shrugged it off. And all I can think of is, once again, investors are looking forward. They want to hear what the CEOs have to say about earnings, Taylor.
And about some of those 30-year bond auctions, right, that we got today, Romaine, as we continue to fall back down to a 229.
Do we still pay attention to those?
We do. We got the 3s and the 10s, the 30s today, and it's strong, right? The bar has actually been low, Caroline, but we're doing all right.
But it has been a kind of change of leadership day. Even though we hit these new record highs, it's notable that we get it on the NASDAQ 100 too. This is about big tech back in charge. This is not a strong reopening kind of trade day. This is actually the reverse, Romaine.
Well, isn't it kind of funny that we, go back a couple months and everybody said, okay, we're done with the big tech trade. We're done with the momentum players. And yet that's where, Taylor, you see new money continue to be really focusing on.
Yeah, that's called the new bond market, safety.
It is.
When yields fall, it is amazing what tech and the NASDAQ 100 at record highs can do, Romaine.
Yeah, all right. Well, we are about to get the closing bells here. You're looking at S&P 500, punched to that 4140 level. Remember, this was on a trend line downward just about a month ago, below 3,800 here, decisively higher. We should point out, though, with the record highs that we've hit, the last 4 record highs we've hit, they've come on days where we've only gained fractionally. So we're not seeing these big 1-2% jumps that maybe we saw back in the day when we were getting those record highs. Russell 2000 down, Dow Jones Industrial Average down, your NASDAQ higher on the day. This is the NASDAQ. What are we looking at? The composite here, quite a little shy of a record high here. The NASDAQ 100 is going to close here at a record high. Tesla, Moderna, Zoom Video, a lot of those big tech names drawing us higher.
Yeah, absolutely. And what's interesting, Romaine, you're breaking down those overall numbers. We did finish just off our high, so we certainly saw a rally kind of into the close. Of course, little change on the S&P and Dow, as you mentioned, but nonetheless, we saw stocks moving higher. We saw bonds moving higher and yields backing off. So we saw a correlation, certainly, between that equity and bond trade, guys.
Yeah, Carol, I love that you're bringing up the bond market because I'm here taking a look at a sector level, and everything within the bond equity markets was taking its cues from the bond markets. As you can see, tech, utilities, equipment, software, real estate, right? These are all the classic bond yields lower. These equity prices move higher. So that was that exact correlation that you're talking about. We come down on the bottom. It is dividend financials and banks. Of course, we not only push the story forward to bank earnings, but when yields fall, you typically do see some of that pressure on the financials. And so, Carol, that definitely was a classic trade that we saw today.
Yeah, listen, you guys, Caroline, Romaine, you were talking specifically about some of those momentum players, big tech names, Apple among them. That stock was rallying in today's session up about 2.5%. They're going to hold their first product unveiling of the year. That's going to happen on April 20th. Check out Mark Gurman's reporting about some of the products that maybe we can look for. Tesla upgraded to a buy with a new price target of $1,771. Canaccord Genuity weighing in on that. Tesla up 8.6% today. You had Barron's also writing about Tesla momentum. And then you also had Moderna coming out. We had to take a look at Moderna because of J&J, Romaine, but we did see Moderna, definitely a big pop, up 7.5%.
Yeah, and it was interesting, too, because one of the biggest decliners today, of course, is J&J. And then a lot of people decided, well, let's pile into Moderna, let's pile into BioNTech, let's pile into Novavax. I'm not sure how that really shakes out, what the value proposition is there. GM was also down here on the day, something we didn't talk about here. There's actually an investigation into a potential airbag recall. That took a little bit of a chunk out of the shares. Bank earnings, of course, tomorrow. JP Morgan, Goldman Sachs, and Wells Fargo, kind of the biggest names that we are going to get. And Crocs, sorry to break this to you, Taylor, but Crocs taking a leg down.
What happened to my Bieber fever?
the Bieber
where's
bump
Justin
is no
Bieber?
More.
Who wears Crocs? I'm just going to put it out
Justin
there.
Bieber.
I mean, well, apparently maybe Taylor does, but there's no Crocs to be had when I'm looking at what's happening across asset for our radio and TV audience. We're going to look at what's happening in the FX market because CPI data, sure, it ran higher than we were expecting, but not enough for anyone to fear that the Fed is actually going to be swooping in anytime earlier than expected. So we did see actually a dollar weakening story, and we saw the euro push higher. higher, up 0.3% for the euro. This is as we sit at a 3-week high, so money moving into there. We saw the yen up 0.3% as well. Really a story of dollar weakness on the day. What did that feed into the commodities sector? Well, actually, we saw some strength in the commodities because of that dollar weakness. WTI crude up more than a percentage point as we look towards that OPEC Plus meeting as well. Steel up 1.4%. Some of those concerns about China manipulating commodity prices downwards just reprieving a little bit today. Nat gas on a tear. And lastly, I go across the world with our global bonds, and actually a very mixed picture. There's actually money moving out of bonds, it would seem. Yields a little bit higher in Europe, Taylor, but it seemed to be perhaps a search for safety in the US that was going on?
100%. I think it's so funny that we come off yesterday talking about the 3s and the 10s as uninspired and blah, and today a 30-year bond auction that does strong, better than good were the headlines that I see. Indeed, a 30-year bond yield catches a bid. We're down by 4 basis points, with that coming in at a 232 earlier. So we certainly migrate downwards. And what was so interesting, Carol, is this was really reflective in some of the news that we got this morning. We had that J&J news, the pause on the reopening trade around the concerns of that vaccine. And so bonds were catching a bid. That meant some of the Russell 2000, that reflationary trade was over as really that vaccine news really took it front and center.
I'm just thinking about you and Crocs still. Although I wear clogs, which are just wooden Crocs. I'm just going to say, hey, J&J is a huge story, but I feel like our team here and all of the guests that we've had on radio and TV have put it into perspective. We're going to hear from the CDC and FDA officials tomorrow to kind of figure out whether or not there's a problem here. You have to put it in perspective. We're talking about 6 cases, 6 women, millions and millions of vaccines have been put out, you guys.
Yeah, and I think that's why you saw the market take this in stride. It was a similar story, of course, with what we saw with inflation as well, that 2.6% jump on a year-over-year basis. Distortion is what we like to call that.
Base effects is what we also call it. I mean, we can't look at year-on-year equivalence with inflation. It's got to be maybe a 3-month or a 6-month perspective. But it is still running hotter, and I feel as though the whole market was anticipating an overshoot.
It's not running hotter. Little perspective. There's going to be some supply shortages, and it's going to be temporary, and then the economy's going to ramp up again. I'm with you, Ray. I'm with you, Romaine.
No, I demand Tim get out from working from home. Get your
Tim's with
to the
me
office.
on this.
Tim is going to be the 5th tiebreaker here as Carol and Romaine team up against Caroline and Taylor. Not
My
nice.
odds are on me and Romaine.
Crossing off my
Not
Facebook
nice.
feed here.
Listen, Feds Harker agrees with Romaine and me. He's not worried.
That's right. And look, I mean, I think when you look at, in all seriousness, when you look at sort of what we saw with the market action today, I mean, yes, we did hit record highs, but you saw a little bit of volume still remain subdued here. The S&P still tracking below 500 million shares a day, well below what we saw in the months of March and in February. On top of that, you saw the growth names getting a bid over value, over dividends. What does that tell you?
Well, take a step back, and maybe it's slight risk aversion here, because you see money moving into bonds, US bonds, you see money moving into perhaps what has been deemed, well, the haven trade that is big tech. That's why we're seeing those sort of companies on the rise. And maybe it speaks to also some of the concerns we have about regulation as well, Carol. We are looking into new paradigm shifts, taking away the frothiness out of the SPAC market, for example.
Yeah, let me just remind everybody, this is Beyond the Bell. This is our cross-platform coverage on Bloomberg Radio, on Bloomberg TV, taking a look at the closing bell. And listen, when you talk about this, one of the things when we talk about the market at large, guys, is SPACs. And that's a story on the Bloomberg as well. And I think as we've seen such a growth, Romaine, as a result of that, there's some concerns, some worries, and that means more regulation, perhaps.
Yeah, and there's a broader worry here, too. I mean, you do have a new administration with just a new focus here with regards to how it looks at the financial industry. So it's not just about SPACs. There could be a lot more regulation coming down the pipe, not to mention higher taxes here. So something investors definitely have to factor into their models, Taylor.
Romaine,
you do models, don't you?
When we
Is that
do
what they teach you?
accounting on level 2, are
Level
warrants liabilities or equity? How do you account for warrants on a balance sheet?
Well, if you're honest,
There
they're
is the
liabilities.
CFA, my friends. There is the CFA. But also, that folds not just into the world of what's happening in SPACs, but also, Carol, the world of crypto, because there was also that news that perhaps we're looking at taxing of Bitcoin in a slightly different way. Some of the new, well, that's coming from Capitol Hill, some lawmakers looking at that. The SEC, of course, going to be looking at the regulatory viewpoint of what you look at in terms of crypto, all important for that direct listing tomorrow.
That we are increasingly talking about crypto and that we're talking about SPACs just says to me that this is all becoming much more mainstream, and that regulators are getting involved. That also says to me that, listen, it is on everybody's radar, and this is a part of our system. All right, that's going to do it for Beyond the Bell, our cross-platform coverage of the market close on Bloomberg Radio and Bloomberg TV. We're going to be back again tomorrow, same place, same time.